Get a better idea of how much pain could be in store to curb inflation. The Federal Reserve expected to raise interest rates on Wednesday. Economists predict it'll go up by a substantial 3/4 of a point for a third consecutive time, pushing the interest rate to the highest level in 14 years. So joining us now, NewsNation business contributor Lydia Moynihan. Lydia, how is another interest rate hike going to impact the average American?
I know we talk a lot about inflation and interest rates on this show, but I think this sort of economic saga we've been seeing play through this entire year is really coming to a climax this week. We're going to get a lot of resolution about will they, won't they, will they raise rates higher, will they push us into another recession? And there's basically three outcomes that are likely out of this scenario. And of course, it'll just be a matter of when we find out what the result will be. But kind of the three story endings we're looking at right now is the Federal Reserve keeps raising rates higher, so much higher that it pushes us into a recession, which just kind of has a cooling effect across the economy writ large. Businesses are less inclined to borrow. Things just slow down. That's one scenario. Another scenario we're looking at is that interest rate hikes aren't enough to curb inflation, and that's what we've been seeing the past few months play out. That means every time you go to the grocery store, it seems like you're paying more money for a can of spaghetti sauce than you were just a couple months ago. That is the second scenario. And then the third is this sort of Goldilocks scenario we are looking to have happen where the Federal Reserve is able to thread the needle. They're able to raise rates just enough to tamp down inflation without pushing us over the edge. But even that sort of third ideal scenario is still challenging in the interim. Raising rates means that if you were a borrower, you were paying a lot more money for the same stuff that you were paying a lot less for just a few years ago. Take mortgage rates, for instance. If you're looking to take out a 30-year mortgage, you're going to be paying north of 6% on that, when just a few years ago, you're going to be paying closer to 2%. Over the span of buying, let's say, a $500,000 home, that additional interest rate can cost you about $200,000. So even though we're kind of hoping for this ideal scenario, we aren't pushed into a recession, the cost of borrowing is going up really substantially in the short term.
Yeah, I think it's so well illustrated, you know, when we put it in terms of mortgage and the extra amount paid in interest there. Lydia, I know you had those scenarios there. How high could the Fed continue to raise interest rates? And is it going to take some type of major economic downturn like we saw back in 2008 to finally turn things around?
Well, the thing is, no one seems to have an answer to that. This is a global issue. You're looking at the central banks in England, Sweden, Switzerland, all meeting this week. They're grappling with that same question of how high can we go? And I think clearly whatever the Federal Reserve has been doing has not been enough to tamp down inflation. And we see Jerome Powell sort of sounds like in general, the tone and the language he's using is very aggressive. He's going to do what it takes to get the job done, even if it means pain, even if it means pushing us into a recession. But clearly, even the smartest economic minds in the world aren't really sure just how high they need to go. But what is clear is that this aggressive stance we've been seeing, 75 basis points twice this summer, that has not been enough to raise inflation or to tamp down on inflation. And this, of course, comes amid inflation increasing. Just last week, we got this CPI, the Consumer Price Index, coming out showing that core inflation, which is the measure the Federal Reserve looks at, has actually increased over the last month.
All right. Yeah, not looking good right now. Okay, Lydia Moynihan, thank you. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.